Alright. It's Jared here from Crypto Plan. How's everyone going? I hope you're doing well. Alright, I've got a trading idea. Well, a trading method that I want to show you guys. It's something that I've learnt of one of my mentors, one of the people that I subscribe to, called the Silver Chartist. But anyway, it doesn't matter that it's about silver. It's a trading idea that's based on the 200-day moving average. So if you like trading ideas and you like ways of kind of entering and exiting a trade, then you're going to want to watch this to the end. So please like the video, please subscribe, and please click the notification bell if you like this sort of content. Okay, so we're going to use the One Harmony chart because it's a kind of a perfect example of how this would have played out, right? So we have some things on the chart. So we've got a 200-day moving average in the blue line, and we've got obviously the price action in the bars there. And down below, we've got a distance from the moving average indicator. So the distance from that 200 moving average indicator. So the first thing I'm going to do is just plot this line, because that is the maximum distance that One Harmony has ever wanted to separate itself from the 200-day moving average, right? So it's only had a short lifetime. So that's, that's our first line in the sand. So we kind of can predict our exit point on that based on that. But what I want to kind of show you is that down here, there was a bit of price action. And let's say you were lucky enough to get in there and in hindsight being the greatest thing of all, we would have made an entry once the 200-day moving average was broken and we broke out of it clearly. So we would have made an entry in and around, just under a cent there. And we would have ridden that all the way to the top here, kind of seeing that this indicator down here was going quite parabolic and selling out somewhere near the top, and if we missed the top, we had that one more chance to get that second attempt at the high there, but that's kind of not something you'd want to be depending on, you definitely want to be selling out there. So that's fine, and that's the trade there, and we could have or couldn't have done that, depending on whether you're holding or not. But now the beautiful thing is that we have the data. We didn't have this data previously. We didn't, we had the 200-day moving average, and you might know to kind of put the trade in after the 200-day moving average, but you wouldn't have had that data telling you how far this thing wants to extend, how bullish will it get before it wants to correct. Now we have that data. So if we were to put a trade in on this, and I actually did buy a little bit of this dip, so I could kind of treat that recent purchase of, 1,000 One Harmonies or whatever I got as a trade, as a kind of a cash trade, So the idea we're looking for is that when things move back to test their 200-day moving average, so when they get quite close to their 200-day moving average, that would be a good entry point, knowing that we're still in an uptrend in a bull market, like this strategy is not going to work so well in the bear market because you're going to cross the 200-day moving average and go down. So stop losses are probably important on these sort of trades, but kind of being kind of confident and knowing that, we're in a reversal pattern in the crypto market in general, as in we've sold off a lot and we're probably going to bounce back, it would be good to make an entry in and around here. So, on any weakness back towards the 200-day moving average, we could be making entries into this trade with stop losses below the 200-day moving average, and letting that one ride and seeing what happens, right? And then the beautiful thing is that when price action does correct and it decides to fire to the upside, we then know that if we ever see this moving, this distance from the moving average extend this far, it might be an indicator to sell, and especially if, that's getting towards the end of the year, for example, and we're seeing it go up there. Now, it could get more bullish than that. There's a potential for that. So you might want to start scaling out at 1,000% from the moving average all the way up to 1,400%. But at least we know there's a kind of a line in the sand where we could say this thing's bounced off its 200-day moving average once, it might hover around there for a little while now, then it'll fire it out of there. The 200-day moving average will go kind of, the way it does, up kind of slower than the actual price action. It'll extend, you know, these green candles here will start going up again, starting to get up there, bang, you know, that's our exit indicator. You know, it's not a price indicator, it's an extension indicator from a moving average. So that is that, you know, and I think if you look around crypto, and you know, even going to these crypto miners, pulling back to 200-day moving average, pulling back to 200 moving day average, Binance Coin back to 200-day moving average, Ethereum not quite down as low, One Harmony, Peercoin's the only one that didn't. I think it kind of went so aggressively there, so its pullback wasn't as bad. ADA, same thing, a little bit stronger. XRP definitely pulled back, tapped onto the 200-day moving average. Game credits went below, so once again, I've put in a trade based on, you know, this being an overextended and oversold bottom, and knowing here that we've got this 600% from its 200-day moving average that it wouldn't mind being too far away from, you know, which is more than likely going to be somewhere around my $1.80 target. Cake, not enough data there. Hathor, not enough data there. Dash, well below its 200-day moving average, so there's a trade there. EOS dipped kind of in and around its 200-day moving average. ZRX went well below its 200-day moving average, so, you know, on reversal around the 200-day moving average, it's a good time to pull back in, knowing when we could exit that trade. So, and Stellar there, same deal. We have tapped in and around our 200-day moving average. So there is a bunch of trading opportunities out there for the short term. You know, to separate things from your hodling portfolio. You know, if you just want cash flow injections, or, you know, kind of simple one-off trades where you know where you're getting in, you know where you're getting out, that's the way I'll do it. That's the way I'm doing it, and that's what I've done recently to take advantage of this dip. So if you like that sort of stuff, please do like the video, please subscribe to the channel, and please click that notification bell. And happy trading, and I hope that you all have learned something from this. The 200-day test of the moving average, trading entry and exit strategy. I've been Jared. This has been Crypto Plan. Bye for now.